This is the Value Investor Podcast with Tracey Ryniec. All things value, all the time.
Welcome back, value investors. So I planned on doing kind of a general podcast this week about finding value as the market's hitting new all-time highs and the growth stocks looking a little stretched here. I know those of us in value land are thinking about what might be good value stocks right now so that we're not caught up in the kind of overstretched situation happening with those growth names. But when I decided to run a screen, I came across an area where we just did a podcast on it. So I decided to do another podcast on this industry. And yes, it is the banks. But this time I was struck by how many international banks were on this screen that I ran. And why is that? Why are all these international banks showing up? They are all definitely cheap, and they've got number one strong buy rankings right now. And the stocks have taken off, as we saw when I have covered some international banks in the past. These have, and even just financial services companies, they've all just really taken off here, but nobody's talking about them. So we should, because they're cheap and they've got the momentum. So what was the screen that I ran? It was one of the predefined screens on Zacks.com on the screening tab. And you have to be a premium member to get these. So I enjoy running them and then sharing with you what was on them if you aren't a premium member. So this one was high rank value. That's it. That was the basic name. But I don't think I've ran this one in a while. I find it kind of boring in a way, just like, oh, high rank value. It looks for the trailing PE and then the price to book ratio. Then you also have to have a number one or number two, which is the strong buy and the buys. That makes sense. And then it also threw in this dividend, which I'm kind of into right now. There's a lot of companies that are paying pretty decent dividends right now. And I like getting those little checks. Even if they're small, it's still fun to get the checks or, the money just put in my account as it is these days. So this looked for dividends above 2%. The PE, which was trailing, not forward. So this is what's happened in the past. The PE is 15 and under, which is what we look for as value investors. Price to book ratio is less than 3. That is what I always look for value as well. So I ran this screen and it gave me 138 stocks. It was a lot. But just scrolling through, I started to see a pattern. Even if I didn't know what some of these companies were, I did know just based on the names that these were banks or financial services companies. Now, there were a few others that were also on this list, but it was interesting to see how many international banks made this list. So it's sending up a signal. Something is going on there, and it's got the very high ranks as well. So let's dive into 4 international banks. And then I tacked on 1 US bank too, just because I like the name and I was a little intrigued by it. And it's very small. These other banks, the international ones, are all large cap and much larger. So we'll do 1 US bank kind of at the end there. Okay, so the first one I chose out of this list was Banco Santander-Chile. So there is a bigger Banco Santander, just Santander Group. Many of you are familiar with that, but this is the Chile specific part of it. And it is the largest bank in Chile. The ticker is B as in boy, S as in Sam, A, C as in Chile, BSAC. And they are owned by the Santander Group. As I said, that's their main shareholder at 67.18%. They've been in Chile since 1978. So this is the main bank in Chile. If you've ever been down there, I'm sure you've used the ATMs. And maybe if you are living down there, you open up an account there. So it's a Zacks #1 rank. So I'm liking that. Strong buy. And it has well, we're not going to care so much about the PE, right? Because with banks, we care about the price to book. And that's why a lot of them are showing up on this list, because they are cheap on the price to book level. And we looked for 3 and under. So with banks, as I said in the other podcast from last week, you want to buy at 1 and you want to sell at 2. And anything over 2 is starting to get a little pricey. So Banco Santander-Chile is on the pricey side. It has a price to book of 2.5. That's a little bit higher than even JP Morgan now, which is considered to be a pricey bank right now. Forward PE, well, this is the forward. Let's just skip the PE. We don't care. We're going to go with the price to book only, as I said. $11 billion market cap and dividend yielding a very juicy 4.2%. I'm not hating on that. Shares were trading near 1-year highs. They've come down a little bit off of that. But still pretty pricey. Earnings 2025 expected to be up 23.9%, and then 2026, 9%. So you can see just on earnings growth why it's looking pretty attractive. And estimates, one estimate is higher in the last 30 days for both this year and next. So that's what's getting you the #1 rank. And we have 2 estimates on the company for the full year. So at least 2 people covering it. Again, it is a little difficult to get coverage on the foreign banks, the same way with small cap banks and like community banks. But we do have 2 here. Shares are a little bit volatile, up, down, kind of trading in the same trading range since May. So keep that in mind. But if you are interested in Chile, these banks usually run in tandem with what's going on in a particular country. So keep that in mind as well. But you have to have some knowledge of Chile to really want to own this one, because it is pretty pricey here with the price to book of 2.5. But this is Banco Santander-Chile, ticker BSAC. Okay, going on to number 2, Toronto-Dominion, ticker T as in Tom, D, just 2 letters, Toronto-Dominion, TD. Market cap $126.4 billion. It's a top 10 bank in North America. I'm assuming they're originally in Toronto, but across North America. Price to book 1.56. So considerably cheaper than Banco Santander-Chile, and right in the middle there between 1 and 2. So not dirt cheap, not super expensive, kind of in the middle. Dividend for that one yielding 4.2%. So similar to Banco Santander. And what else we need to know? Earnings are expected to fall 0.5% in 2025 and then rebound 8.9%. Shares were pretty depressed the last couple of years, but in 2025, they've really taken off. Still not at those 5-year highs. And the earnings estimates starting to turn around as well. So that's what we like to see, the turnaround in the estimates. We have 6 higher in the last 60 days for this year and next year. Expected to see earnings, as I said, decline 0.5% this year, but then rebounding again next year. So if you're interested in Canadian banks and one that's just North American focused, Toronto-Dominion is the one to watch. TD is that ticker. And then we're staying in this part of the world, and we're looking at Bancolombia. I've looked at this stock many times. It is one of the, if not the biggest bank in Colombia, founded in 1875. So 146 years supporting the country's development. That's what it says on their website. 10.7 billion market cap. The ticker is CIB. C is in Colombia, B is in boy, CIB. And it's a Zacks #1 rank as well. And so price to book, is it cheap? 1.29 is the price to book. That's pretty cheap. That's the cheapest one so far. We're getting closer to that one. Earnings expected to be up just 1.9% this year and 6.2% next year. Shares have really run this year, busting out to 5-year highs. It does have a dividend and it's yielding 12.8%. They're paying $5.69 a share. I think this is one I was looking at a little bit ago, and they may only pay it once a year, not quarterly. So keep that in mind if you are interested in the dividend. So $5.69, they're expected to make $6.42 this year and $6.82 next year. So is that safe? Are they really paying all that out? I'm not sure. You need to look at their history on the dividend and see if, it's been consistent. If they're only paying out once a year, it might be variable. Let me look, because that's an important thing, because I know many of you are looking for, very nice higher dividend paying, but we do start to ask questions once we get dividends, above 10%, which we all should be asking. So last year, 2025, 4 equal payments. April 1st, July 2nd, October 1st, January 2nd, 2025. So they paid 3 in 2024 and then 1 in 2025. So it looks like things can change based on what's going on at the bank and the world, global economy. 2023, they also did the same. So it might be 2025. This might be the first time they're doing, maybe this is one big payout, and you're not going to get anything else for the rest of the year here. They do call it extraordinary dividend, so I'm not sure. It doesn't tell me anything more. So that's the difficulty with the foreign banks. You have to dig a little deeper. Sometimes their websites are a little different. They might not even be in English, but usually you can translate somewhere on the website. But this one is in English, but still a little difficult to understand. But we're going to say that they paid the dividend already. So keep that in mind if you're looking at Colombia for the dividend. And that's going to focus again on Colombia. So if you know what's going on inside the country, then this is one of the options for you. Okay, then moving on. This one, I had to look up to know how to pronounce it. Intesa Sanpaolo, and I'm pretty sure I'm getting that right, even though I am the worst pronunciation person. But the ticker, IS, N is in Nancy, P is in Paul, Y, ISNPY. It is a Zacks #1 rank. And this is Italy's largest bank. They do retail, corporate, wealth management. They have 2,966 branches in Italy. They have 762 branches in other European countries. They have a few branches in Asia. They have a lot in Africa, 176 branches there. Market cap, 100.9 billion. So this is a big one. And price to book, what is that for this Italian bank? And it is 1.43. So on the cheaper side, and dividend yielding 4.9%. So that's pretty juicy, almost 5% yield here with this Italian bank. Earnings expected to be up 18.6% in 2025 and 7.8% in 2026. These shares have soared. They've soared the last 3 years, basically. They're at 5-year highs, but still attractively priced with that price to book of 1.43 and this nice dividend. So if you're thinking Italy and Europe in general, check out Intesa Sanpaolo. ISNPY is the ticker there. And then I wanted to tack on the small cap US bank. It's going to look real tiny compared to these big guys. Sierra Bancorp is the one that made the screen. B as in boy, S as in Sam, R as in Robert, R, 2 R's, BSRR. And they own the Bank of the Sierra. It was founded in 1977 in southern San Joaquin Valley, and they have 35 locations throughout California. They are a number one. And what is their price to book? Price to book is just 1.2. So these smaller, I guess you can call it regional, but I would call this community bank. Smaller community banks are even cheaper than the regionals or the big banks. And this one is trying to bust out to a 5-year high. It's trying to get there. Dividend on Sierra Bancorp, 3.26%. Market cap of just 423 million. So you can see it, they're not even at $1 billion. Very small. Earnings this year up 4.6. Next year, 7.5. So not super strong earnings growth, but the key is to get it cheap, and we are getting it pretty cheap at 1.2 on that price to book. So that one is Sierra Bancorp, BSRR, and I really love their website. I do get taken in. It's the beautiful Sierra Mountains. And their tag is putting your dreams into action. And at the top, they have like a mountain logo, and it says Bank of the Sierra, keep climbing. So yes, I'm taken in by good websites and inspirational taglines. So that's what banks do, though. They are supporting a country's development or a region's development or a city's development. They're loaning out so you can start that business, so you can buy that house, so you can build that apartment building. That's what banks do. And some of these bigger ones have the wealth management side. Even the smaller ones may also have a wealth management component too. So you can open up a brokerage account, that kind of thing at a lot of these biggest banks as well. So some of the big ones will also have, assets under management that goes into play as well, especially when the stock market is doing well, either in the country or either globally. But the thing that really struck me is that many of these are trading near 5-year highs, but also near 1-year highs if they're not at the 5-year, and yet they remain cheap. So take a look at the banks. Don't just tune them out. Someone had some good calls getting into some of these, like, Intesa Sanpaolo, which is busting out with a nice chart at those 5-year highs. So take a look, and I promise I won't have banks on every single episode because we did avoid them for a while. But something good is going on. All of these Zacks #1 ranked strong buys, and they're showing up in my screens for a reason. They have been ignored for many years. Maybe it's time to look at the international banks, the U.S. banks, the regionals, and even the community banks. But tune into any conference calls if they have them. And, keep them on your watch list for sure. So let me recap the banks again. So we had Banco Santander-Chile in Chile, BSAC. Then we had Toronto Dominion in Canada and serving North America, ticker TD. Then we had Bancolombia, ticker CIB, in Colombia. Then Intesa Sanpaolo, ISNPY. And then we rounded it up with the U.S. smaller community-sized bank, Sierra Bancorp, owning Bank of the Sierra, ticker B as in boy, S as in Sam, RR, BSRR. And as always, be sure to run the free screens on our screening tool on Zacks.com. You don't have to be a premium member to run those basic screens, but they may not include the rank in there, but you can still find some good cheap stocks and get some good screens on there. So check those out if you're not a premium member. And as always, you want to subscribe here so you can get all of the stocks I'm bringing every week. We're on Apple, we're on Spotify, we're on Amazon Music, we're on YouTube. Go to Zacks Podcasts and add us on YouTube. But be sure to get us somewhere. And I'll be back next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.